A system that's based purely on debt can never sustain itself because at some point you have to deal with the debt. You either pay it, you roll it over, or you default on it. So you have to understand that by design, and when we went into a full debt-based system, and I was there in the early 70s when we transitioned from a gold standard to a debt standard. So I was, I was in my teens, so I didn't really fully understand what was happening. But I definitely remember the energy in the air. I definitely remember all the chaos around everything that was happening, civil rights, women's lib, oil embargo. I mean, there were a lot really high interest rates and inflation, et cetera. I definitely remember that. And it feels very similar to me now. It feels very, very similar to me now. The currency shift is when they've used up all their old tools to keep things going, which they have right now, because the biggest tool is interest rates. Interest rates have been anchored at zero, so going back to that whole pile of debt. But if you're talking about Bitcoin or cryptocurrencies or central bank digital currencies, technology has sped up a lot. My grandfather lived to be 99, and he was born in 1864. And I used to think, wow, look at what he saw in his lifetime. I mean, he saw automobiles, he saw electricity, he saw telephones, he saw major changes happening over the course of his lifetime. But as technology has advanced so much, the pace of those changes has sped up. And so I was born in 1954. The level of change that I've seen in my lifetime has far, frankly, surpassed what my grandfather used to see, during his. And it'll keep getting faster. And the information keeps getting faster. So I read the NSA white paper in 96 on how to make a fortune from cryptocurrencies. And I think, my opinion on it is Bitcoin and the other cryptocurrencies that came in were really about getting us used to making that transition. And they're going to have to burn off this debt first. I did a whole bunch of digging to see, particularly around central bank digital currencies, to see what would justify the creation. Because for a while there, it seemed like they were going to a transaction-based new currency method.
Yeah.
First of all, it was really hard to find any reference to it. But the little that I did, they're still talking about basing it upon debt. So they've got to burn the debt off. You need a clean balance sheet if you're going to start a whole new regime, because how in the world can you start a new regime when you cannot afford the old regime? As long as the public has confidence in the central banks and in the government, then they can keep kicking that coin. It doesn't mean there are no consequences to it, but yes, they can keep kicking that coin. The problem is that people have been losing confidence. And there's, lots and lots of studies on that, and confidence has been declining. And I think that's a big reason why this time they have to give the money to the public, because they're trying to calm the masses. And we saw before the coronavirus kicked in, all of the global riots and upheavals and, and move of populism, et cetera, which is pretty typical. That's actually really typical during a currency regime shift. But that the coronavirus gave them the ability to quash that. Look at Hong Kong. I mean, that's like the absolute perfect example. And the other thing I'd like to kind of point out here, Kevin, if you look at the World Economic Forum symposium that's coming up, well, you own nothing and you're happy. Well, if you don't own it, somebody else does, because wealth never disappears. It merely shifts location. So if you hold all of your wealth in intangibles.
Yeah.
And and all you can convert it into is the dollar that has zero value. What do you have? That's why, I mean, I just have my little silver things here and gold things, but that's why you've got to have intangibles outside of the system in order to, and real money, so that you're in a position to take advantage of those opportunities when they present, because nobody's going to know when this whole thing is just going to come crashing down. Well, it's kind of, yes, it's that, because people inherently know there's something crazy that's going on. Something doesn't feel quite right. And, inflation, when they created this whole system back in 1913, if you read Keynesian economics, what they say, 1 man in a million does not understand inflation, and that inflation causes nominal confusion. So if I had a $20 bill 10 years ago and I have a $20 bill today, nominally they're identical. They're both $20 bills.
It's $20, yeah.
Right. But what that $20 bill would buy you 10 years ago, and what it would buy you a year ago, and what it buys you today, very different. Very different. And so, just think about this for a second, because this is, and I don't know why this always stuck in my mind, but my father was a developer and he used to work out of the house, and he built a very nice house, very high, high-end house. And there was this young couple, and I remember standing in the doorway and my mother going, he's a comer, he makes $12,000 a year. Now, he worked for IBM, he was an engineer, but the average income then was $9,500. So somebody making 12,000, that was substantially higher, right?
Yeah.
And I used to babysit for them, 25 cents an hour, I mean, right. I mean, you have to put it into perspective. They would go on vacations, they went out all the time. Today I think the average income is like 48,000. So most people would go, well, yeah, I want 48,000, not 9,500, except a family of four could live on that 9,500. I'm not saying they were super wealthy, but they only needed one income. Today, you've got to have two incomes and you're still paycheck to paycheck. And so when you see your debts climb and you see that your income cannot keep pace with the rising prices, then you start to get disillusioned.